Anshul Saigal has been doing it for a living for a very long time, is now joining us to talk more. Anshul, whatever said and done, is it a godsend opportunity? Because otherwise, the trading community, the investing community would have pointed fingers at here and there. But now it is the global correction which is doing the needful here in India. So it's all par on course, isn't it?
Hi, Ajay. Good afternoon. Pleasure to be with you. Um, it is a godsend opportunity on two counts. One, if you're holding cash, then clearly this is a time to start deploying, nibbling at the margins. Second, if you're not holding cash and to some extent you're holding, questionable stocks, then with this correction, even the quality names have corrected. So you may want to improve the quality of your portfolio and shift some monies away from weaker names to stronger names. And so clearly, I mean, there is no doubt in my mind that corrections are to be cheered. They are not times when one should be sulking. Particularly when you have made so much money over the last 3, 4 years. I mean, just the last 2 years, if you see, the small cap index itself is up about 70-75%. And if you were in half quality names in this period, then your stocks would be up 3, 4 times. Having made so much money, giving some away, and waiting for better times to return after the correction eases, is what a seasoned investor should seek. And I think that this time should be cheered.
Andrew Ferris is also joining us. Andrew, for a moment, I'll go back to that issue of global growth. If US growth indeed looks challenging, can it cast a kind of a shadow on overall global growth? And hence, emerging market investors like India should also be a bit worried. Andrew? Okay. Andrew got disconnected. We'll come back to Andrew in a minute. But you were raising that point, Anshul, a very good one. In the last 2 months, as I do kind of travel around the country, bulk of the big HNI, ultra HNI had, out of caution or, willingly, out of experience, had raised a lot of money on the side, 20%, 30%, and were not comfortable deploying fresh capital. Will this cut which is coming in, and if it lasts another week or so, will it drag those investors back to markets? That cash will keep a fall cushioned here?
HNIs, by virtue of them seeking absolute returns, are not worried if they let go of a percent of upside here and there. And they're more concerned about capital protection. Hence, they hold cash on the sidelines when markets are stretched. And they will be in no hurry to deploy it en masse in the markets because of this shallow correction. But the story is quite different with fund managers and asset management firms. As you may be aware, Ajay, in the last 6 months, we've seen many of these asset management firms accumulate cash. In fact, the aggregate cash holding in the system is roughly 1,25,000 crores at this time. And we are adding 20,000 crores on a monthly basis to this kitty. Now, given this setup and also their pressures on performance, it will be this cohort which will be looking to deploy capital in the markets. And also, this is the more significant capital. Here I'm not even talking about the alternate assets class, which is PMSs and AIFs, where again, the amount of cash that they're holding is added to this amount. So the cash sitting on the sidelines is quite substantial, and this is cash which has pressures on performance. And it will be this cash which will be coming in to deploy. HNIs, of course, they will be deploying, but they will be deploying on an opportunistic basis. Stocks which they have been tracking, where they see deep cuts and where prices have reached where they think it's lucrative to deploy capital, it is there that they will be going in and investing. En masse investments, unlikely.
Okay, so that's the view coming in as far as the market mood and market setup is concerned. Yes, off late we have all been used to, one side move on the markets, at least in the last 3 to 4 years, and even giving up 4-5% seems like a very, scary task at the moment, but that's how the cycles have always played out. So that was perhaps par for the course. But you know what is holding out okay is clearly the FMCG pack. So at Dabur, Marico, which just reported its numbers, the volume growth came in at around 4%, in line with expectation. The commentary is quite good. It's something which is holding out in the green. Britannia, even though it was, softish kind of number, there was at least nothing way too negative in the number. So that's holding up quite okay. HUL is doing well. Nestle, etc. are the other factors. Kunal, is this the place to hide right now? Britannia, HUL, Nestle, Tata Consumer, these are your top 4 out of the 5 on the Nifty.
Yes, on a relative basis, you may protect your capital over here, but then whether you're looking at incremental returns in case if the market gets into recovery, I think that could be questionable because, if the pace of correction has been on the sharper side, assumingly, say in the next 1 week or in the next 4-5 days, assuming if the global setup, just about tends to be a bit more stable, I would probably believe that, the high beta spaces could probably make a very strong comeback. So I think what we need to now look out for is, for example, sectors like autos. If you have stocks like Tata Motors, which is almost at 1200 just about last week, it's come back towards 1070, 80 mark. I think that would be a very good point to try and look at a contra buy over here. Maybe Bajaj Auto could be something of a similar stock in that similar category in terms of a stock which is buying on dips. So yeah, FMCG can protect you in terms of the sharp sell-off, but then if and when the market gets into a recovery phase, I believe that the recovery and the performance could be much more better in the other sectors.
You said if and when there is a recovery.
If
Not
and when
really
there is
when. As in, is there really a if question right now on recovery?
No, I think it's a matter of time. That's what I said. It's a matter of time. See,
So, but
whether
are
it's
you
tomorrow,
expecting the consolidation or the sideways move to be a lot more protracted right now, or do you expect it that this is perhaps just a 1 week or a short-term bout that we are seeing of sell-off?
See, generally sharp corrections are generally met with sharp rallies whenever the market bottoms out.
If it's a sharp correction?
It's a
Or
start
is it
of a
gradualish kind of a...
No, I think this is a sharp correction.
Okay.
So I think whenever the news settles out,
Okay.
I think the correction may not be just
But
stable.
what does the reading show? Nifty, Bank Nifty, where do you see the...
I'll give you a very strong seasonality picture. So last 24 years, the data is in an even year. And we're talking of the years in 2008, 2020, and we know what events transpired. The Nifty has never given negative returns in the month of August.
Oh,
As a
interesting. So we
seasonality
are in the
factor.
month of August.
Yes.
So would you recommend start buying now or maybe a day or two?
So that's what I said. You start buying in phases.
Stagnated, okay.
Yeah, but as I said, that the recovery may not be very slow, gradual. It will be V-shaped whenever the market finds a bottom.
Okay, we'll take a short break on that note. Much more to discuss on the markets on the other side. Don't worry. All right, so while we are talking about not to be panicking in this market, look at the advanced decline. A lot of stocks actually have rebound from the lows and have started trading higher back into the green. Can you pull up the advanced decline? 230, so 1:10 roughly right now. Look at the mid-cap stocks. A lot of mid-cap, small-cap has started coming back. One stock I want to discuss with you, Anshul, is Indigo. You would be surprised to know that today Indigo management made a very detailed presentation. Along with Mr. Bhatia, Rahul Bhatia himself interacted with my colleagues, and a lot of positive commentary coming in, but one which caught my attention was they would be looking at adding one new aircraft every fortnight or every week or something like that. Very positive. Let's play a slice of that conversation, and then I'd like to know your thoughts on either Interglobe. Not ready. Okay, we'll come back. Would you play a Interglobe right now, or maybe some of these airport companies? What are your thoughts there, Anshul?
This is a space, Ajay, where that is travel inbound or within the country, where I see that sky is the limit. Given that given the positioning in India, which is that we've got such a diverse country, and also the supply is far lower than the demand. Actually, sky is the limit here. Particularly in airlines, this is a business. And I've said this in the past also, essentially businesses where you have low margins and where efficiency requires you to, or efficiency requirements are quite stringent. In such businesses, you see monopolies get built because the efficient players, which are a handful, they always take the markets. You look at retail, you look at steel pipes, you look at airlines, similar sort of setup, and here again there is one player which is really taking the lion's share in market share, in the industry. Now, is that likely to change? I don't think so. At least as the setting stands today, it doesn't look like. And if the demand patterns are where they are, then this company or the leader in this space will continue to get stronger. One anecdote I'll tell you about this company, which probably you may also not know. They sell more food items on their airlines than the largest QSR in the country. That is how big their food business is for this company. And there again, they don't have any pricing sort of caps, etc. Unlike on the seats, in food and other items, they really don't have any price caps. So this company is run very efficiently. They run like a very efficient ship. They have similar sort of aircrafts which they run, which is why the cost on this business is far lower for them as compared to some of the competing airlines. So I'm positive on the space in general, and I think the leader will become even stronger. They will gain, at least retain the market share, or if not gain, in the coming few years.
Okay, so that's the view coming in. But since we're talking about Indigo, let's hear out the management as to what they had to tell the analysts as well as media in their meeting today.
We have embarked on the journey to go more international, and I shared with you the recent expansions which we did on our international network. And as recent as earlier this week, we have announced Jaffna as our 34th international destination, number 34. It's going to be our first ATR international destination. And let me announce here today that before this financial year is over, we'll be adding another 7 international destinations, bringing the total to over 40 international stations. Between today and the end of the decade, we will double. And I showed earlier that 500 plane order will take us well into the middle of the next decade. So if you just think about it, some other airlines talk about it, but for us it's reality because the orders are there. 8 plane, 8 week for the next docile. That's what we're doing.
Okay, so that's the plan that they have for the next 10 years. As far as Indigo is concerned, they're of course launching the business class as well, and the street wants to know more about how they're looking at managing the profitability despite all the efforts that they are making. In terms of the market mood right now, well, we have seen a bit of a dip. I'm just looking at BSE stats right now. Almost 3,400 stocks out of the 4,100 are declining. So advanced decline ratio clearly is tilted completely in favor of declines right now. 577 stocks are locked in lower circuit. And if you look at the overall capitalization loss that had happened, at peak we were down almost 16 to 17 lakh crore in terms of market capitalization. It's narrowed a bit. We are looking at a cut of just around 13-14 lakh at the moment, but still quite a bit of pressure on the markets. In terms of individual movers, which are the outperformers? Well, you have Glenmark Life, which is actually 6% higher. Cera Sanitaryware is doing quite okay. I think it's one of those result candidates. Marico, of course, Devyani, which also reported its numbers, and HUL. These are some of the stocks which are holding up in the green right now. Vinay Rajani is also with us on the show. Vinay, what's the best strategy right now to deal with the market volatility? What's the top recommended trade?
Yeah, so in last 3 sessions, we have seen that Nifty has almost corrected by 5%. And if you go by the points, almost 1200 points correction in last 3 trading sessions. Definitely global market setup was weak. And because of that, the market has seen a momentum selling in today's session. So if you were to look at the overall scenario, it still looks weak. There could be some sort of pullback. So 200-300 points pullback in the Nifty cannot be ruled out. But if you were to look at the overall setup, it still looks like that the positional trend should remain bearish. The support which I see for the Nifty is around 23,600, which happens to be the 38.2% retracement of the entire rise that we witnessed from the 4th June low towards the new all-time high, which was 25,078. So after election result, whatever recovery we have seen, if we were to take 38.2% retracement, it comes at 23,600. Up to that level, I'm expecting this correction to continue on the downside. So that is my first target as far as short positions are concerned. There could be a pullback, as I said, in intraday or tomorrow morning, but I think these pullbacks should be utilized to exit long positions and create short positions. So, or I'm looking for sell on rallies kind of opportunities. And ultimately on the downside, I'm expecting a target of 23,600 immediately. So overall setup of the market looks weak and our trend should remain down only.
Anshul, have you looked at some of these RPG group companies? Recently, they had an analyst day, Philips Carbon, many others, CSC and others. Any of the businesses do you find value in?
Ajay, over the years I've looked at these companies, but I don't look at them very closely. There is, there are some companies within the group where I do anticipate that there is going to be value addition, which is that from lower value added products, they're going to go into higher value added products, which will be market margin accretive. But how much of that is already in the price, I'm not aware because I don't look at them very closely. I've been, in this group, I've been in the past invested, but not anymore. So, pardon me for not knowing enough about this space.
Okay, point taken. Not a worry, but yes, these stocks have seen quite a bit of interest of late, so maybe they'll come back on your radar as well. Thanks, Anshul, for making time and speaking with us. It's been.
If you like this video, then like, share and subscribe to ET Now.